Silver would probably have to be $200 right now just to be equal to those highs. Okay. And don't be surprised if that's what ends up happening. But right now, our expectation is from a trading perspective, not, long term, we're going a lot higher. But between now and the end of the year, I think there will be a burst that's already begun, actually. If you look at late June, we were coming up through 33, 34. Now suddenly we got near 40 recently. No, excuse me. Yeah, the upper 39s. I think the getting up into that zone will be like a refreshing burst up out of the mire, of silver's vast underpricing for the last decades.
When adjusting for inflation and currency devaluation since previous price peaks, silver would need to reach approximately $200 per ounce to match its 1980 high in real purchasing power terms. While this represents a substantial increase from current levels, the ongoing debasement of fiat currencies provides fundamental support for such long-term projections. Analysts project that silver mining stocks could triple in value relative to the metal itself over the next 12 to 24 months. This forecast is based on improving profit margins at current silver prices and the historical tendency for mining equities to deliver leveraged performance during strong bull markets in the underlying metals. Michael Oliver, founder of Momentum Structural Analysis, argues that today's gold and silver bull market is unlike past spikes and collapses. He sees it driven by deep U.S. and global vulnerabilities, particularly the stock market bubble. In past crises, metals have surged while equities have declined, and he expects a similar trend to continue now. With central banks boosting their gold reserves and China pushing digital yuan and yuan-backed stablecoins to challenge the dollar's dominance, precious metals could play an increasingly central role in a shifting global monetary system. Emerging proposals suggest a strategic rethinking of money itself, shifting from fiat to gold-backed systems. Discussions within BRICS contemplate a settlement currency partly anchored in gold and local currencies, while analysts have speculated about a gold-supported digital yuan. When that bubble bursts, as he believes is already beginning with the S&P and Nasdaq, he expects a global shift toward gold-backed money systems, something already being promoted by China and echoed by some U.S. states. Silver, often mislabeled as just an industrial metal, has historically moved in step with gold and could also regain a monetary role. Unlike U.S. Treasuries, which are losing credibility, monetary metals are emerging as the only reliable haven. Gold miners' strong performance suggests that this shift is already underway and may soon become institutionalized, thereby restoring gold as a form of real money. As we present clips from the video, please like this video, subscribe to our channel, and turn on the notification bell to stay instantly notified every time we upload a new video. Thanks for the support and enjoy the video.
I don't think we have a normal bull market in monetary metals here where you're going to go up to gold, $850 and then drop back to 200 like it did between 1980 and 2000. Go up to the $1,920 high in 2011 and drop down to 1,050, that kind of stuff. I think there's enough major macro, technical, and fundamental events underway globally, but also with focused in the U.S. because we're the greatest error out there right now in terms of the bubble, stock market bubble particularly. That when that breaks, and it will, and I think we're in the process of topping the S&P and the Nasdaq and breaking that bubble, that the consequence monetarily will be a global shift. They're countries adapting money that's backed by gold as opposed to fiat. I think that thought is already out there. The Chinese are already expressing it to other countries as well. And silver is, after all, I know everybody likes to think it's an industrial metal, but if you go back and look at its history, its major swings up and down, forget about this week or that week, okay? It moves with gold. It doesn't move with industrial metals, okay? Sometimes the industrial metals like copper and so forth are in sync with silver, but don't let that confuse you. It really does not follow the commodity complex so much as it is in step with gold. So even silver could be monetized. And already we're seeing some state legislatures, I can't get into detail, but Florida, Texas, and there's a lot of others who've said not only they're not going to tax gold and silver transactions, it's just like money, buying something. They are they are legal tender. Whoa, what a statement. I mean, when a state government describes gold and defines gold and silver in their state as legal tender. In fact, I think in some of them you can pay your taxes in it. Florida, I think, has set up agencies to service tax payments through. They're in effect rebelling, miniature rebellion against the national monopoly, Federal Reserve, etc., over what is money. They're saying, no, we decided this is money. That's a rebellion. And I think as the events of the unwinding of the asset bubbles that have been boomed by monetary expansion, by free money for 10 of the last 15 years, et cetera, that when that breaks, all the errors associated with that bubble that are exposed during the breakage process, much worse than we saw in 2008 and 9, for example, in terms of real street events. That's when people rethink what is reality, what works. That really hasn't worked. Let's get rid of it. It becomes emotional at some point. And I think we're on the cusp of that. That's what I think will help drive the acceleration phase in the monetary metals. It's already underway. They're anticipating reality. They don't wait for it. Gold rarely waits for the stuff that you look back and say, oh, now I understand why it went up. It knew it ahead of time. Okay, somebody did. And I think we're at that phase now where once that other stuff crumbles and that asset flows start to seek homes elsewhere, well, there's usually very few homes for it, safe places, gold and related, and T-bonds. T-bonds aren't working this time. So it leaves you one thing, monetary metals. And if you look at the behavior of the gold miners, it suggests to me, like Newmont, for example, which is not an outperformer right now. It sometimes is an outperformer in the sector, sometimes underperformer. It's resurrecting itself, but it's still not outperforming GDX, for example. But it has exploded. It's up like 60, 70% this year. Nobody's pounding the table. You don't hear it on the financial TV networks. Look at Newmont. It's up, instead they're cheering the fact that the S&P is like, oh, it's 5-6% above its old high. Oh boy. And I think the S&P right now, as we speak, is up about 9% on the year to date, where it closed last year. The gold miners are up 60-70% on the year. Okay. Anyway, this is unfolding, and I think it will speed up. And once it reaches certain levels, I think it will become institutionalized again. Gold as real money.
The speaker reflects on decades of experience in futures trading, starting in the 1970s when gold was re-legalized in the U.S. He notes that geopolitical events, such as wars, often create only short-lived spikes in gold prices. Buying gold solely based on war headlines usually backfires, as such events are not the primary driver of long-term prices. Instead, the real force behind gold's rise is the steady growth of the money supply and the ongoing devaluation of currency. He points out that while houses once cost just a few $1,000s, they now cost hundreds of thousands. Not because homes have become inherently more valuable, but because money itself has lost purchasing power. Over the past 25 years, gold has risen more than 11-fold, compared to just 3.5 times for the S&P 500, making it far more effective at preserving wealth. Gold's value stems from certainty. As long as governments continue to print money and expand the supply, currencies will erode, and gold will maintain its purchasing power. Wars may accelerate money printing, but they are not a prerequisite. Currency degradation is a constant, regardless. Now, let's recall the interview.
In my experience, since I got into the future side of the business, I was a kid practically in the mid 1970s when gold was legalized. 75, I worked with Hutton. I've seen a lot of little headlines that pop up here and there of some war incident. Somebody shoots somebody they didn't expect, army versus army. And so, suddenly there's anybody who buys those news headlines usually gets kicked in the gut for having done it. In other words, you might get a little spike in gold upside because of that, but it's ill-advised buying. Look at, for the most recent example, a big example. There was a big debate back in early 2022, late 21, whether Russia would invade Ukraine. The troops were amassed, but a lot of experts in the area said, oh, no, it's not really just threatening. He's not really going to do it. And all of a sudden he did it, February 22nd. If you shorted gold in the few weeks after that event, when it was near high, you nailed it. And you made about, we were up in the above 2,000 again in price. It dropped to 1620 by summer, fall of 2022. You dropped 20% in gold after that war event started. So when the war started, commodities and gold both peaked within days or a few weeks of that event after having had a major move well prior to the event, which was, again, not really expected. So if you bought war news then, you got killed. Now, ultimately, gold reasserted itself. Now, I find war events are not the driver of gold. You want to know what the driver of gold is. Get an M2 chart or a money supply chart from any country, Western world. Put it on your screen. Do the math of every 10 years, what's the rate of growth in the money units, the supply of money, and therefore the degradation of money. When your granddad built a house, it cost him $4,500. Now it costs $450,000. Okay, so is that because houses are? No, it's a degradation of the money unit. Gold maintains its value versus the ongoing degradation in the money units, period. And until that ever ends and we go to a gold-backed money here, there, and globally finally, that's going to continue. It holds its value. You go back like 25 years ago, summer, 25 years ago, so exactly 25 years, in mid-2000, gold's gone up more than 11-fold. S&P 500 has gone up 3.5-fold, which is done better at preserving your money. Okay, it's the degradation of the money unit ongoing. Yes, there are times when gold will inhale and exhale, but ultimately the curve, it will maintain its value versus the degradation of the money unit. Not because of this war sometimes wars help stimulate money growth because they print money. But governments don't really need that excuse. I mean, you go back to the mid-50s, well after World War II, and you'll see this upward curve in the money supply, regardless of a war here or there. Okay? So anyway, that's my argument. If you're in gold, don't make that mistake that it is driven by uncertainty. No, it's driven by certainty. Certainty that the money units are constantly degrading. Period.
Michael Oliver emphasizes that the current bull market in gold and silver is fundamentally different from past cycles. It is not driven by temporary geopolitical shocks, but by structural weaknesses in the global financial system, unsustainable debt levels, and the ongoing debasement of fiat currencies. With central banks diversifying into gold, China advancing gold-anchored monetary innovations, and silver poised to reclaim its economic role, the shift toward precious metals is both systemic and enduring. This makes gold and silver not just speculative assets, but essential safeguards of long-term wealth. If silver truly regains a monetary role alongside gold, how might this reshape global financial systems currently dominated by fiat currencies? Could a gold or silver-backed digital currency from China or BRICS accelerate the decline of U.S. dollar dominance? Please share your opinions by leaving a comment below and participating in the discussion. If this video was helpful to you, please subscribe and like it for future updates. We appreciate your support of our channel and the time you take to view it.